So with your trades the week ahead, and what a disappointing week it has been. On Friday we dipped below the 5,900 mark, and for the week we've lost a good 1.5%.
Yeah, and not that the results that came out during the week, save maybe a Sun Pharma, did justice to the earnings season as well. So earnings disappointments continue.
Oh yes, it does. In fact, we were just about dragging our feet, but it's been a 50-point loss thereabouts. Day in and day out, and it's been a gradual steep down that you've seen for the market. So a 1.5% loss for the week. The mid-cap index lost 2.8%, but the biggest battering, so to speak, has been for the small-cap index. A 3.6% cut coming in. Banks lost 2.4%. Consumer durables, a 5% cut. Power, metals, oil and gas, as well as realty were your other losers this week. And of course, the cuts were sharp for names like an Ambuja, ACC, Maruti Suzuki, Dr. Reddy's, Ultratech Cement, ONGC, Hero MotoCorp, and of course, like Neeraj just pointed out, earnings. So M&M was a disappointment as well.
At the broader end of the market, well, tons of numbers and tons of newsmakers as well. Jubilant FoodWorks right in the thick of things, Sepco right in the thick of things. There was Bombay Dyeing, which came out with news as well. And all of these stocks, if you look at the charts, extremely volatile. Similarly for a Strides Arcolab. The stocks were down one day, up the other day, down another day, and a very torrid week for some of these. Strides Arcolab as well went down quite a bit, almost 12 or 13% in one session, that is on Thursday session. In Friday session, recovered 3 or 4% in trade. So lots of individual stocks which made news. But yeah, I guess none more so than the kind of result reactions that came in for either a Bank of Baroda or, for that matter, some of the cement companies like Ambuja. Talk more about that and lots of individual stocks. To do that, two experts with us, G. Chokkalingam, Executive Director and Chief Investment Officer at Centrum Wealth Management, who give us a sense of the fundamental end, and Mitesh Thakkar to give us a sense of the charts. Gentlemen, thanks so much for joining in. Mitesh, well, not really a washout week, but yeah, slowly grinding lower, a 1.5% lost. We are at that, we've broken some crucial levels as well this week. How do we trade on the index from here on?
Yes, Neeraj, I think, the week wasn't much damaging in terms of percentage fall in the Nifty, but two important observations which I would like to make. One is that the weekly open was around 6,025 and the weekly high was 6,038, 39, something like that. While the weekly low was around 5,885 and the closing was around 5,895 to about 5,900. So you've opened at the high of the week and you've declined throughout the week and closed at the lower end. So the candlestick pattern formation which is there for the week isn't very positive, clearly damaging. Also, what has happened in the meanwhile is that we have kind of broken below the December and January beginning breakout level of 5950, 5930. So all this does suggest that, you possibly are likely to trade in the next few weeks with some kind of a negative bias. And I think the important support levels which one should watch on Nifty on the downside would be now at about 5840. And I would even look at possibilities, and a strong one at that, of the Nifty declining further in the next 2 weeks to levels of around 5760 to about 5750. In this entire thing, I think now 5950 on the upside would be a very difficult level for the Nifty to get past in the short term, and I think any trading view should be negative unless until we start closing above 5950 regularly.
Okay, NTPC clearly was the one stock which was in focus and hogged all the limelight in trade on account of its OFS, and a bumper OFS at that. Very good response coming in.
Mr. Chokkalingam, come to you really. A view on NTPC, because it was priced well, a couple of positive announcements that came in too prior to the OFS commencing. How do you view this one? It got subscribed to the lower end, but what does it do from here on?
It's not going to create substantial wealth, but definitely it can give anywhere 10 to 15% return to the investors, for simple reason that right now it's quoting around 1.5 times price to book on 14 earnings. And in the past, it used to enjoy as much as 2.5 times. So definitely, it's too huge a discount to the past historical average. At the same time, it is most unlikely to get back that 2.5 because of various, developments regarding the fuel supply and, the confusions regarding the tariff, all that. But however, I am quite confident that, if not 2.5, at least 1.7, 1.8 times book it should enjoy. And therefore, it should give about anywhere around 15% return in the next 6 months to 1 year.
Okay, some key numbers and from the PSU banking lot. After the PNB uptake, most would have expected Bank of Baroda or a Canada Bank to follow suit. They didn't do that really. Bank of Baroda in particular was fairly disappointing in terms of the kind of numbers that came out. PAT down 21%, NPAs showing a rise as well. Both net and gross NPAs way above what the initial targets were. What did you make of the numbers, Mr. Chockalingam, particularly a Bank of Baroda?
Quite disappointing. Bank of Baroda is also being a PSU. It suffers from the same, fact which has led to the stress for most of the PSU banks. That is, net NPA and gross NPA being significantly higher than what it is for the private sector banks. Last 2 quarters, the banks have not succeeded in, in containing the outstanding NPAs. And they were not able to reduce like the way the private banks like Yes Bank or Axis Bank, ICICI Bank have reduced. So therefore, it got impacted, and I think 2/3 of the PSU banks would continue to suffer at least for 1 more quarter. They need to see definitely the reversal of interest rate cycle. Only when that happens, the stress coming from the outstanding NPA can get moderated. So therefore, I would stay away from Bank of Baroda as well as from 70-80% of the PSU banks for time being.
Okay, the saving grace for the week has to be Sun Pharma. Good earnings coming there. More importantly, good contribution coming in from Taro as well. So this was really a standout performer all of this week. Good appreciation in terms of the PAT. A good 32% bump up coming in and way past the street estimates as well. Mitesh, what is it that you foresee for Sun Pharma? Do you think there's further upside in the stock?
I was looking for that. In fact, Sun Pharma is one of the pharma stock which is kind of outperforming, though I think it failed to get past the earlier swing highs of about 760, 765. So I think next week if the stock manages to do well and starts trading above 765, and this week I think the intra-week high is around 760. So I would be looking to buy into this one. The only worry is that the CNX Pharma Index has given some kind of a breakdown, but that could also be because of Ranbaxy and Dr. Reddy is also correcting towards the fag end of the week. I think Sun Pharma between the pharma stocks is the strongest, but from a trading point of view, I think now traders should wait for the stock to get past 765 and then look for a target of 800 plus.
So some key numbers that came out this week from the mid-cap end. What did you make of some of these, Mr. Chockalingam? There was a Jubilant Foodworks, a Jain Irrigation, a Manappuram Finance, a UCO Bank. Anything that caught your eye particularly?
Yeah, I've seen all these 4, but I would still not advise investors to buy any of these companies on this correction. UCO Bank, as a typical PSU bank, still suffers from high NPAs. And Manappuram, the good management, but unfortunately, they have problem of industry as well as problem of increased competition. If you look at, many banks also got into the gold loan business, and apart from few more NBFCs also, getting into the business. On the other hand, there is going to be a lot of pressure in, encouraging the pledging of gold, since gold import is creating a lot of problem for a current account deficit. Jubilant Food is, it's a solid growth company, but I firmly believe that it has been already rewarded in terms of perception-driven PE, and I would advise selling of the stock anywhere around, $1,150. And Jain Irrigation, I'm a little worried about the leveraging. And in this market, there are a lot of debt-free companies with a high dividend yield and consistent growth available at attractive valuation of even 4-5 PE. So considering this relative opportunity, I would stay away from Jain Irrigation.
Mitesh, want your thoughts on Bombay Dyeing as well as Strides?
I think Bombay Dyeing, clearly has gone into a strong downtrend, and it's been declining for 5 weeks, slightly oversold now, and has also broken with the 200 average. My sense is that around 90 is where I think the stock will head towards. So 90 to about 88 is the support area, and I think it might bounce back because it's slightly oversold, but I think the stock will now face significant supply at levels of around 105 to about 108, and I think 90 should be the next logical target over here. Strides appears to have completed one leg of a down move. I think 866 or 868, whatever was the low day before yesterday, which is Thursday. I think that's also the 200 average plus 850 some kind of weekly support area. So the chart structure has been damaged, but I think it's hit an important support area. Maybe it will give some bounce back, and around 1000 I think now would be an excellent opportunity to exit or take short positions. Unfortunately, I think it's not there in the F&O segment, so selling is the only idea around 1000 levels, and I think eventually we will see much lower levels.